Good morning, and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew, and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, it's going to be an interesting week ahead, considering that last week, for the first time after 4 weeks of gains, we saw declines for the benchmark indices, but the broader markets outperformed.
Absolutely. And clearly, if you go to see, there is some bit of profit booking that's coming in, taking into consideration the way the large caps have moved as well, right? Clearly, we've lost almost 1% in the past 1 week, as you mentioned. And there has been profit taking that's coming in terms of the banking pack as well as the IT names. And as we know, these two are few of the heavyweights in terms of the contribution that they have to benchmark indices. So that's where the pressure is. Now, to see and markets resurrect once again, we will have to see the participation to come back from both these sectors.
No, certainly. And in fact, speaking of the IT sector, Hiral's done a conversation with Moshe, and that plays out in just a bit. In fact, at 9 o'clock. So don't forget to check that out. That'll give you a sense of where things stand, and interesting comments, Hiral, being made about valuation picture for IT companies in particular.
Absolutely. And he's clearly indicating that, yes, the sector is in a transition phase in terms of the current year. And that's when we will start seeing green shoots coming in. So let's see how actually things pan out. But clearly, there is profit booking that we've been seeing. But apart from that, if you see, there is that sector rotation that could be on the cards as well in the market. Nifty is expected to be in a consolidation zone. That's what analysts are alluding to so far, at least till the time the result season is ongoing. Plus, you have Bank of England that will be announcing its rate decision. Auto sector will also be in focus in today's session, and this is on the back of the monthly auto sales numbers that will start tripling in from tomorrow. So watch out for that sector pretty closely. If you see from a technical perspective, Alex, clearly 19,580, that's going to act as a crucial support level for Nifty 50. And if you're able to, succeed and trade above these levels, then there is a bounce back expected to levels of almost 19,800. However, if we are below 19,580, there is a possibility we could slip to levels of 19,450 to 19,400. So these will be technical levels. And on Bank Nifty as well, 45,250 could be the trend decider in terms of Bank Nifty. Above these levels, there's a possibility that Bank Nifty could jump above to levels of 45,700 to 45,900. However, if we slip below this 45,250 level, then there is a possibility we could see a downward tick to levels of 44,700 to 44,500. Now, let's quickly look at the F&O data as well, because as we know that the August series has started in, the clear open interest build-up that we are seeing right now, that's actually hinting towards a pretty sideways and a broad range-bound kind of a session from here on. Overall, if you see, the open interest addition is at around 11.7 million versus a 9.1 million when we just started off the series. So that's actually telling you how the series build-up is panning out. Overall, the open interest build-up in terms of Nifty 50 is at a 5-month high as well. And call market is happening on the day markets move down, and equivalent of put writing is happening on the day markets rally. So you know what's causing what. Let's quickly look at the highest put OI, that's at 19,600, whereas in terms of the call OI, it's at 19,800 as well. And if you see the rollover analysis for this month, rollovers were almost at 83.95% in terms of Nifty versus a 76.87. So that number is higher. Highest rollovers have been seen in stocks like InfoEdge, Indus Towers, ICICI Lombard. You talk about AU Small Finance Bank and Ograsim, whereas lower end of the rollovers is on names like Delta Corp, ONGC, Tata Communication, as well as the RBL Bank. So clearly, there is an indication that there is stock-specific action overall. Rollovers are higher. There is heightened activity from here on in terms of the August series, but the kind of open interest built up that we are seeing is clearly indicating that it is going to be range bound and there is going to be consolidation.
All right. So consolidation, the name of the game, and we'll have to see if that pans out in trade today and over the course of this week as well. We are in the midst of the earnings season, another couple of weeks to go for the rest of the companies. But one of the trends that we've been witnessing has been an outperformance relative in the cement space, and particularly in ACC numbers that we saw just last week. You saw the PAT number double on the back of a significant increase in volumes. To talk about why this is happening and to talk about the way forward for both this company and the sector, but in particular ACC, we've got Ronald Siyoni, who is AVP and research analyst at ShareKhan. Ronald, thanks so much for taking the time, and good morning to you. Let's talk about ACC numbers. Where do they stack up in terms of your own estimates, and what explains that significant increase in volume?
Sorry. Yeah, good morning. Right, you said it right that ACC was a very outperforming results in terms of volume growth. It was around 24% volume growth. So we have seen Ultratech reporting 20% volume growth. So this growth was, a strong beat on our estimates. Apart from that, the operational performance was also better than expectation at around more than 800 rupees EBITDA per ton, driven by lower raw material cost and other expenses on per ton basis. So overall, on volume front and operating cost per ton basis, there was a significant outperformance, and hence the overall net profit beat was there in ACC. In terms of results, if I can talk about on the overall cement sector, Ultratech and Sri Cement have both reported operationally inline results. Both reporting a stronger volume growth, EBITDA per ton of over 1,000 rupees, while ACC outperformed in this sector. We have seen some weak results also in terms of say Dalmia Bharat and JK Lakshmi Cement, where the volumes were lower than expectations, EBITDA per ton were lower than expectations. But for the broader sector results front, we have seen this sector, reporting a strong demand growth during Q1 in double digit, and the growth is, seen across the different regions. Especially Eastern region has outperformed all other regions in terms of demand growth.
Ronald, thanks for getting us these updates. Good morning. You mentioned about clearly the volume growth has remained strong. Fuel prices have softened, as well as there has been an improvement in the operating efficiency as well of cement companies. Now, if you have to look at the rest of the year, how are you expecting the demand to pan out, taking into consideration that the sector as a whole has always historically, experienced a high volume growth in the pre-election years? And as we know, 24 is going to be an election year. How is the demand versus valuation panning out?
Now, if we see the management commentaries, all of them, basically Ultratech, Sri Cement, they expect double-digit volume growth for FY24. Dalmia expects around 15 to 17% volume growth. JK Lakshmi also expects, 18 to 19% volume growth for FY24. So the stronger double-digit kind of growth is demand growth is expected for FY24. The demand would be driven by a strong infrastructure sector, as you said, that the pre-election demand remains very high, especially, roads has been a bellwether for this infra demand last year and this year as well. Apart from this, there is also very strong housing-led demand also. We have seen from past 2 years housing numbers and the strong outperformance in terms of, sales done by these realty players. And this is expected to continue going ahead also with a strong launch pipeline for FY24. So both of them are kicking in. We are seeing infra-led demand and housing-led demand both, kicking in during FY24. And I think this is not a very near-term kind of a scenario. There is, a sustained upcycle which is expected from these players, and hence, they have been aggressively going towards their capex program. Like Sri Cement also expedited their capex plans of 7,000 crore for 12 million ton of additions. Ultratech continues to be on expansion plans. JK Lakshmi Cement has also been trying or looking for inorganic opportunities. So all of these players are also looking at aggressive expansion plans, considering the strong demand continuing for over the next few years rather than just 1 year. If we talk about the valuation front, we have seen that Sri Cement premium valuation premium in terms of EV to EBITDA multiples getting reduced and more aligned to Ultratech, post the income tax survey, and a little bit operational performance also coming down vis-a-vis to other players, as other players have catch up in terms of operational performance. Ultratech, the valuation EV to EBITDA multiples are in terms of 5-year average historical multiples. So Ultratech, most of the players are, in the range of their 5-year average multiples. There's still further room for upside. Whereas in Dalmia, we see that the multiples have increased significantly. Hence, we have a hold rating on the stock. While Cement, we have upgraded to hold after reduce as the operational performance has improved. Ultratech, we have maintained buy with a price target of 9,400. JK Lakshmi, post corrections because of there have been market rumors about inorganic expansion in West and their fundraising plans of 2,500 crore. So this offers an opportunity, and hence we have retained buy with a price target of 770.
Okay, all right. Thanks so much for that summation of your ratings and your targets as well. Ronald, thanks so much for taking the time and for speaking to BQ Prime.
Thank you.
All right. Speaking about earnings and focusing in on the automotive sector, Maruti Suzuki is set to report its numbers for the first quarter, and quite a few updates to be very careful about and to watch very closely. We've got Vinay joining in to give you a sense of the key numbers to watch and the other operational highlights to focus in on. Vinay, good morning. What are the key numbers?
Thanks, Alex. According to Bloomberg's consensus estimates, the profit is likely to jump quite a bit. So there are two reasons for it. First is the higher sales and the increasing share of SUVs within those overall sales. And the second reason is if you dial back into the last year, the Ukraine-Russia war broke out in the fourth quarter, but the impact was seen in the first quarter, where the commodity prices shot up quite a bit, and you could see the impact on the profitability of the company as well as the profit of the company. So if you see at the data, the margin has gone down to 7.2%. So, but this quarter, in the June quarter, it is likely to go up to the 10.2%. And the similar impact can be seen in the profit as well, which was at 1013 crore. And this is likely to jump quite a bit, more than twice towards 2,466 crores. And if we look at the sales, the number of sales has increased quite a bit. So there has been a 6% increase in the overall sales to around 5 lakh units in the quarter. And the sales have been quite driven by the new launches in the form of Jimny and Fronx, which was unveiled at the Auto Expo in the previous quarter. So, and if you look at the sales in the domestic front, the sales have risen 9%. And it has limited the overall impact of the decline that we have seen in the exports, which has been a continuing story in the overall auto sector. Back to you, Alex.
Thanks, Vinay, for getting us the details. In fact, that's a good qualitative analysis that we've got as to what can be expected and why. Thank you for getting us all of them. We'll come back to you once the earnings are out. In fact, he'll be getting us the auto sales preview as well during the day, so watch out for that on BQ Prime. But moving on, from a preview, we'll be moving to a review in terms of NTPC. Power stocks have been on a high in the last couple of trading sessions. In fact, NTPC reported numbers which were above what the street was estimating. In fact, the markets probably were expecting the same as well, because the stock ended with gains of almost 3.5-4% in trade on Friday. Rishi is joining us to get more details on the same. Rishi, what is the number indicating in terms of NTPC? Will the up move continue today?
It would probably continue. So earnings, actually, they beat estimates by quite a margin. So revenues were down by 0.2%, so it was more or less flat. But net profits, they were higher by 23%, and EBITDA was also up by 19%. Now, this was because globally the fuel costs have been much lower, and that has come into the statements for NTPC as well. It fell by 2,600 crores. Now, NTPC's installed capacity, it rose by 5.65%. And it crossed the 73,000 megawatt mark, and this was on account of various organic as well as inorganic expansions that it took. The energy sent out, it fell by 2.68% to 82.3 billion units. Now, its coal production, its coal sector is something that has been in the highlights. So its coal production, it increased by 52% to 6.24 million tons year on year. Now, NTPC has also decided to completely hive off its coal mining business to completely wholly owned subsidiary, that is NTPC Mining. So its coal business has about accounts for about 25% of the NTPC revenue, and it also has 6 coal mines. So that's also something that to look out for.
All right. Thanks so much, Rishi, for that update. NTPC, a stock that you should watch out for in trade today. And in fact, there are several more companies that we are watching with regard to earnings, and a lot of financial names that have reported numbers as well. Himansh is joining in to give you some perspective on that. Himansh, good morning.
Good morning,
Long
Alex.
list today.
Yes, a very long list from the BFSI pack, and it's quite a mixed bag. So starting with Star Health and Allied Insurance, while PAT estimates of 2,900 crores missed estimates, the company has maintained its guidance for the combined ratio to be in the range of 93 to 95%. It currently stands at 97.8. For your understanding, the combined ratio for insurance companies is a percentage of the expenses and the incurred losses over the premiums earned. So it gives investors an indication of how efficient the company is. So lower the better. And coming on to Bank of India, they delivered strong results with net interest income up 45.3% and PAT all doubling to roughly 1,500 odd crores. Asset quality moderated with GNPA and NNPA standing at 6.67 and 1.65% respectively. Coming on to DCB Bank, their net interest income was up by 26% year on year. And while their asset quality deteriorated slightly, with GNPA at gross non-performing assets at 3.3%, down 0.1% quarter on quarter. Bank deposits remained strong at 23% year on year versus 19% in the previous year. Net income interest declined by 3%, led by a decline in margins. And PAT also declined by around 11% quarter on quarter due to higher employee expenses. IDFC First Bank, they posted a healthy growth in the commercial finance and retail loan segment. The wholesale book was flat year on year. Deposits grew at a healthy 36% year on year, but the CASA deposits remained flat quarter on quarter. Then we have SBI Cards, which as per reports, they have reported a slight miss in their PAT due to lower fees and higher provisions. Notably, even RBL Bank faced a similar seasonal stress in quarter one. SBI Cards lost some market share in their total volume of transaction spends, leaving an impact on fees as well. Share of the revolver book remains low for the industry, and hence for SBI Cards stands at 24% currently. Equitas posted a strong profits for this quarter, almost doubling on the back of steady growth and margins growth as well. The credit costs remain controlled. They also posted a 33% growth in their loan book. Lastly, we have UCO Bank, which posted a net interest income of 21.8%, which was up, over the previous quarter, standing at 2,000 odd crores. And the net profit also jumped 80% this quarter over the past year. So that's the summation of the BFSI results.
Lot of names to watch out for in terms of pre-open today. Thank you, Himansh, for getting us these names in terms of the financials. But moving on, a whole host of other stocks that have reported numbers from the non-BFSI space. You have the likes of the Inox Twins, Marico, Nazara, United Breweries, Chalet Hotels. It's a huge list, which Mika and Siyoni will be getting up for us. Mika's already here. Mika, which are the ones that you're tracking and how are the numbers stacking up?
Hi, good morning. So first we have United Breweries, where revenue were up 6.7%. However, with net profit was down 16.1%. EBITDA was also down 16.2% at 223 crores, as margins decreased to 9.8% this quarter compared to 10.9% in the year ago period. Then we have Chalet Hotel revenue, which was up 22.8% at 310.7 crores versus 253 crores in the year ago period. EBITDA was up 7.75%. However, margins decreased to 35.33% this quarter compared to 40.27% in the year ago period. The company recorded a tax expense of 514.50 this quarter. Then we have Sonata Software, which recorded a 13.30 revenue jump at 2015.53 crores and net profit growth of 11.46% at 120.12 crores. EBITDA was up 14.23%, and margins were at 93.73% this quarter compared to 92.97% last quarter. Then we have IFB Industries, where revenue is up marginally by 1.73% at 1,085.91 crores. EBITDA was up 55.27% at 4.86 crores, but the company reported a net loss at 0.62 crores versus a profit in the year ago period of 1.90 crores. And then finally, we have D-Link, which revenue was marginally up 1.35% to 299.65 crores. EBITDA was, however, up 29.41% at 28.11 crores. And net profit was also up 29.46% at 20.96 crores.
All right. So you've had a lot of numbers thrown at you, and that's the nature of the earnings season. Mika, thanks so much. If you want to read that in more detail, it's available on the website bqprime.com. And of course, we'll bring you live updates when markets open to see the implications of those numbers. But there's more earnings to talk about. And as mentioned, Siyoni is joining in with the rest of the list. Siyoni, morning. What do you have for us?
So firstly, we have Inox Wind Energy. So despite the total revenue being up 65.5%, the company faced a net loss of rupees 65.77 crore as compared to a loss of rupees 130.24 crore a year ago. Then we've got Inox Green Energy Services. So the company finally turned PAT positive in this quarter. The PAT stood at rupees 2.96 crore as against a loss of rupees 11.58 crore a year ago. And the company follows an asset-light annuity model. Next, we've got Marico. So the revenue from operations missed the Bloomberg estimates, while the PAT largely beat the estimates. The PAT was up 15.6% this quarter. And then next, we've got Lakshmi Organic Industries. So again, the company missed the revenue target. However, it beat the past estimates by roughly 2 crores. And lastly, we've got Nazara Technologies. So Nazara also missed the revenue and EBITDA estimates while beating the PAT estimates by approximately 7.5 crores. So the company expects its revenue and EBITDA growth to accelerate in the coming quarters due to seasonality and their decision to defer key esport launches.
Okay, all right.
So, I mean, those are a long list. I mean, that's Nazara Technologies. In fact, Nazara and Delta, both of them have been in focus as well on the back of the GST, in terms of online gaming. So let's see how the day pans out in terms of both these counters.
We're speaking to Nazara,
well,
by the way, later today.
Today's session as well, yeah. Moving on, a lot of other counters, which are newsmakers, will be in focus in today's session. One of them is a power company. You have Varsha who's joining by to get us more details. Varsha, what's on your list and which stocks do you think will be movers?
Yeah, so there are a bunch of companies which, one need to look at. So first is Piramal Enterprises. So now they've approved the buyback of 1.4 crore equity shares at rupees 1,050 crore, and the shares will be bought back at 1,250 a piece. And the buyback will be open for a period of 5 working days. The next company that we have is Hero MotoCorp. Now, a company is to close Harley Davidson X440 online bookings on August 3, and the production will start in September and deliveries will commence from October. The other company that we have that one should look out for is Gland Pharma, because the company has got zero observation and no action indicated classification from US FDA inspection at its Vishakhapatnam Sterile Oncology Facility. The next company, that is Power Grid Corporation of India Limited. Again, the company has been declared as a successful bidder for 2 inter-state transmission system projects. One is transmission system for evacuation of power from REZ in Rajasthan, and the other one is transmission scheme for solar energy zone in Ananthapuram in Andhra Pradesh. The other company is Tata Consultancy Services. We have seen management changes effective from August 1. So the company gets a new chief technology officer as K. Ananth Krishnan retires, and Harik Wien, the Chief Service Innovation Officer, has been appointed as CTO. The other company that we have is Siemens. Now, the shareholders has opposed sale of low voltage motors, geared motors business. Now, on May 19, this company had announced the sale for a consideration of almost 2,200 crores. Now, analysts had termed this as at a steep discount and against the interest of domestic public shareholders. The other company that we have is Fino Payments Bank. Now, the board has approved proposal for transitioning to a small finance bank, and so Fino Payments will be the first entity to list as a small finance bank after Reserve Bank of India opened its door in 2019, and this transition will allow Fino Payments, to finally lend to its customer and to accept higher deposits. The last company that we have is Jindal Stainless. Now we all know how China, dump products into India at a very low prices, and steel is no exception. So again, the stainless steel maker Jindal Stainless has sought the government's intervention to check increasing imports of steel products from China and other countries.
Right.
And so the government can put anti-dumping duties according to the management.
Thanks, Vasha, for getting us the details. One quick one I'll mention is a Power Mech Projects. They've backed a 30,000 odd crore project for 28 years. That's the deal, period, and the size. It's just coming right now. So you could see some movement, Alex, that could be coming in on that one as well. So lots to watch out for, a lot of stock-specific action on the cards in today's session. That's a wrap from Alex and me. Please stay tuned to BK Prime.